Okay, let's return to his comments. Speaking for myself and other reasoned velocity banking critics, it isn't velocity banking or first lien HELOCs as tools that we have serious problems with. Okay, that's interesting. It's the incomplete, biased, and erroneous presentation of the concepts that is the real issue. Okay, I don't disagree with that. Yeah, that would be wrong with any concept. It's the complete lack of comparison to other strategies while claiming velocity banking is much better. Also, the lack of virtually any discussion of the risks. It's the inflammatory rhetoric used to position velocity banking as a game-changing strategy and banks and bankers as globally predatory or at least ignorant. It's when clear errors in their numbers and or logic are pointed out and they keep the videos up, continuing to mislead viewers and often block those exposing those problems. And also a complete lack of disclosure of their conflicts of interest. I could go on, but I think this is a good start. If we are angry about how velocity banking and first lien HELOCs are presented, it's because real people trying to do the best with their real money, and they are, at a minimum, not getting a fair and balanced analysis and recommendation, and more often are being seriously misled either on purpose by the velocity banking and first lien HELOCs promoter or out of the promoter's lack of understanding about what they are talking about. So don't disagree with that. What he said definitely applies in many cases. I've definitely seen some inflammatory rhetoric. I've seen people who present mortgages like they're horrible and they're payday loans when they're not. Mortgages are actually a very efficient form of debt for the average person. So mortgages, I think, are one of the best forms of debt people can get access to, not some of the worst. I don't disagree. I would just say be equal opportunity about it because all the things you're pointing out exist in pretty much any financial strategy or financial sector discussed. I see the same things going on. I don't know what conflicts of interest you're talking about. All of us have conflicts of interest. There's no such thing as a person who doesn't have some financial incentives. It's interesting how they always single out, as an example, life insurance agents. Like we have a conflict of interest as we sell life insurance. Yes, I'm financially incentivized to sell life insurance. I got into it because I believe in it. Every single person out there has to make money somehow. And therefore, every single person out there has some financial incentive. That doesn't disqualify them from speaking. As Denzel Rodriguez pointed out, a lot of the people criticizing velocity banking happen to be mortgage brokers. I'm not going to jump to their conflict of interest. I'm going to address the argument on its merits. So when you jump to what's basically an ad hominem attack by pointing out conflicts of interest, you're missing arguing on the merits. But again, I don't really disagree with a lot of what he's saying. I hope it applies to other channels, not my own, and maybe not some of the better ones like Denzel Rodriguez or Sebastian Boyer.
There is some oxymoron in the comment. It's a complete lack of comparison to other strategies while VB is much better. So how can it be presented as much better than other scenarios that are not spoken about or compared?
I'll give him the benefit of the doubt. And I think what he's saying is compared to doing nothing. So of course it's going to look better than doing nothing.
So if what he's saying is that VB is being painted as better than the other strategies that exist, but he's also saying that there's no comparison of those strategies, then
yeah, which is it?
How is that possible? Saying that bankers are globally predatory, I'm not going to go so far as to say that, but what I will say is, are there documentaries about predatory lending associated with the bank industry? Yes, there are.
Right.
Say that PBS Frontline is also, actually a velocity banking bad actor, if you want to present that argument, because they have a whole slew of videos that touch on what happened back in 2009 with the lending that happened. You really want to look at your comment and then think about just the vast whole of what has happened and documentaries that support this other theme that I don't know if you're fighting for it, against it. I don't really know what your premise actually is as far as what strategy you're saying makes the most sense. In none of these comments, I can't tell. I can just tell you don't like velocity banking.
Yeah, which he has not defined. Now, granted, he may have defined it elsewhere, so give him credit. And granted, also, I want to give him credit because I like this guy. Mr. Moss, I want you to keep commenting. Your comments are intelligent. You're not calling me names or anything. And I understand you cannot put together a fully nuanced position in a comment section. I understand that. So I'm trying to give him the benefit of the doubt because there's a limit to what you can do in a comment.
Well,
So
there's a limit.
So I do think
you can do on one video.
Yeah, true. But this gets back to the lack of proportionality. You're pointing out the big banks, right? Who's doing more evil, velocity banking promoters or the global banking enterprises, the banking system, the fractional reserve, Federal Reserve System? I would like him to at least acknowledge that those problems exist and they are much bigger than velocity banking.
Yep.
Because I've criticized some people because they've crossed my paths. And I try to be careful to say, look, I realize there are much bigger problems out there. I'm addressing this guy because he happens to be the guy in front of me and who has maybe personally attacked me or victimized me. But I recognize there are much bigger problems out there. And then have a bit more humility about what can I actually accomplish? And let me focus on where my talents are at their highest and best use, which might not be calling out every single error in other velocity banking channels, which are always multiplying. That's a never ending game. I might be better off just trying to work with the clients who are willing to work with me and help them most efficiently manage their finances. Happily, my clients are not stupid and they are not unable to distinguish between good and bad information. I don't think they'll have a problem figuring it out. I'm not worried about my clients getting misled by anybody else. They can pretty easily discern good or bad information. They'll think it through. And if it's not a good strategy for them, they won't pursue it. And I can help them understand that. But thankfully, my clients don't have the problem of stupidity that you ascribe to velocity banking channel viewers.
Yep.
And then he says, totally agree that those you described should be banned. Well, I didn't say anyone should be banned, but I don't think anyone should be banned. Let's just be clear. I'm not suggesting that at all. You're putting words in my mouth. I might call people out, but I don't ban people. I don't suggest people should be banned or beaten or punished. I'm not vindictive like that. I am not vindictive. Stop projecting your own vindictiveness onto me. I may call people out, but I'm not suggesting they be frog marched into a prison because they present a financial strategy that I don't agree with. So, totally agree that those you described should be banned, so unnecessary and so counterproductive to the degree they may be correct in their positions. I will check out the video you referred to. I have viewed a ton of Denzel's videos. They're not in the past few months. We've had many discussions, debates in the past. I'm hopeful he's upped his game on presenting velocity banking more completely. I'll soon see. But again, I think this guy is good. I like getting disagreement in an intelligent fashion, so I want to encourage this guy to keep commenting. I haven't held back any of his comments. I think this is a good, fruitful discussion.
That's fine.
Here's another one. This is on you and me answering velocity banking objections part 3. He says, looks like you believe that human psychology and the resulting behavior is unchangeable, but it is actually affected by education. People don't behave properly with respect to finances in general and debt in particular, in large part due to the abysmal state of financial education in this country. I think you would agree that executing velocity banking requires a certain amount of education in order to be successful. Applying the same net cash flow to the 4% mortgage with an extra payment strategy versus through a 7.5% HELOC strategy results in the velocity banking strategy costing $26,000 more than just making extra payments directly on the mortgage. I would argue that if borrowers were presented with an accurate, fair, and balanced comparison revealing that very substantial difference, responsible and serious borrowers will take that education and do what's needed to execute it. Extra payments can also be easy and put on automatic pilot and even made less visible and therefore more palatable. You repeatedly say that no one makes extra payments, or if they do, they don't stick with it. That just isn't true. What is true is that most people don't attempt to accelerate their debt payoff, but those who do want to do it in the most effective way possible, and they deserve a complete and accurate education on it from those who hold themselves out as experts on the subject. DeAndre, your response?
First sentence is an inference. Looks like you believe human psychology and the result.
Yeah, I obviously, right. Yeah, I don't believe that behavior is unchangeable, obviously.
No. There have been times when I've turned a person down and they've come back to me 2 or 3 years later with pristine credit and gotten rid of all their debt before they booked another appointment with me. So I personally don't believe that human psychology can't change, from
Here's the way I would say it. I would say we all have the wounds of original sin.
no,
That does not go away.
right.
Your behavior can change,
Yes.
but the natural tendencies inherent in human beings do not change.
Yeah.
That doesn't mean you cannot overcome them, but it does mean we need a strategy that works best with human psychology rather than against it. Because he acts like it's just a lack of education. I don't agree. I don't agree.
No.
There is a lack of
Right.
education. That's true.
That is a
But
problem.
it's not primarily,
But that,
yeah, it's not so much a lack of education as it is your ability to execute on it. Because I could say similar things with diet and exercise. Yeah, there's a lack of education there for sure. Absolutely. There are a lot of things people are doing wrong that they think are healthy. But more important than that is the psychological element of, can you execute on any plan you're going to put in place?
Yeah.
Knowing the right thing to do versus actually doing it are two different things.
Very.
Because there are people who are very well educated financially who make horrible financial decisions because of psychology and emotions.
When I saw that, the first thing I thought of was this surgeon that I have that's a client. And when I first met him, he was making 700,000 a year. And he was on track that if he were to die, his family would be poor in 2 years. He had nothing saved.
Mhm.
He had no insurance in place. So just the idea of trying
It must be because he was stupid, DeAndre. It must be
No,
because he was
has nothing to
stupid
do
and ignorant.
to counter that, since he talked about morality so often, we could use a biblical example too. Solomon. Solomon was the wisest man, had the most information, divine wisdom, and what did he do? He turned around and still disobeyed God and did things that led him down the wrong path, despite wealth and intelligence. So wealth and intelligence are not the only things that actually create a decision-making path, right? So I understand where he's coming from. The education is abysmal in America when it comes to financial education. However, that does not mean that even with more financial education, that people would just magically be better with handling their finances. No, I don't believe.
And then what he points out here, again, I would like to see, he just says it, I would like to see this, where he claims that making extra payments on a 4% mortgage versus a 7.5% HELOC strategy costs $26,000 more. I would like to see your math, because I bet I know what you're doing. You're setting up the equation wrong. First of all, do you believe, Mr. Moss, that people should have some amount of liquid savings, some emergency savings? I assume the answer is yes. And how much should that be? However much you think that should be, let's say it's $50,000, that money cannot be applied to the debt because I need to have it safe, liquid,
Right.
and accessible.
Right.
Whereas when I'm doing a velocity banking strategy, I can now apply that $50,000 to the debt. So actually, you would have to give the velocity banking strategy a $50,000 head start, number one. Number two, you would have more net cash flow you could apply to it because,
Of not
first of all, your float is working for you in the HELOC. But secondly, you're making an extra payment. Does your extra payment magically get bigger when your income goes up? No, you just set, I'm going to make an extra $500,000 payment, and that doesn't magically increase when your income goes up.
Mhm.
So it's still less efficient. Could it work? Sure. Might it be the right thing to do in some cases? Absolutely. If I had a 4% mortgage, I probably wouldn't be making any extra payments on it. The other thing too is that debt payoff is not necessarily the goal. This depends on you. I have real estate investors who use their first lien HELOC to finance purchases so that they have their safe, liquid, accessible capital in their home equity, and it allows them to pounce on deals. They're not trying to pay off debt faster.
And
So again, when you compare a first lien HELOC to a mortgage, why are you assuming that paying off the house is the goal?
Yep.
It might be, it might not be in other cases.
Yep.
So which tool works better depends on what your goal is.
yeah, and
People I talk to who have low interest rate mortgages have no interest in paying them off any faster. So we just leave it alone. We don't replace it with a first lien HELOC. We just leave it alone. And that's totally fine. I'm not against mortgages.
in regards to that comment is it actually conveys a misunderstanding of velocity banking. If he feels just comparing the interest rates is enough to say that $26,000 would be saved, that obviously is a misunderstanding of velocity banking because it is not based on just interest rates. In your example, we had nothing about what the person's expenses were, how much money they net monthly, what their taxes are, what their homeowner's insurance cost is, nothing about nothing. Only thing in that comment is interest rate difference. So saying that, oh, it'll change to $26,000, possibly you are running velocity banking as if I had a first lien HELOC at 7.5% and I had a mortgage at two and some change, or whatever his percent was, then I'm running the same payment. There's a singular payment going in every month, and there's not a average daily calculation that drops the interest calculation throughout the month. So maybe you have more information. Maybe you did run it that way. I have no idea. But that certainly,
Yeah, I would actually be interested because it sounds like he's actually run a lot of these scenarios. So he probably does have some interesting data to back it up. And I have no doubt that he's correct in many cases where these velocity banking gurus are putting out misleading
oh, yeah, no, I
information,
agree.
and he's actually run the scenarios to correct them. I'd be interested to see it. I'm happy, Mr. Moss, to give you some publicity on that too, because I'm sure you're correct that you found examples on velocity banking gurus channels,
Sure.
and you're showing how they're presenting misleading information. They're leaving some stuff out. While velocity banking can work, there's a better way to do it. I don't doubt that is the case. The question is always as compared to what? Because I agree with him that oftentimes velocity banking is not compared to the optimal strategy. It may be compared to a suboptimal strategy where it looks good by comparison. But again, what are we really comparing it to? Because velocity banking doesn't work in every circumstance.
Yeah.
More and more, I'm recommending people not to do velocity banking. The reason is because in my case, for a lot of my clients, debt payoff is not a priority. So we might use velocity banking, but we're probably not using it to accelerate debt payoff. We're probably using it to free up liquidity or finance investments or something like that. But if you have no toxic debt, there's no real impetus to pay off that debt quickly. What would be the reason for it?
Yeah.
There could be reasons, but generally we're not doing that. So more and more, I recommend for my clients not to do velocity banking and not to replace their mortgage with first lien HELOC. Not saying it cannot work. I'm not saying it doesn't make sense in a lot of situations, but in many situations, it doesn't make sense. So I want to be clear on this because I think this is something that
Not trying to fit it.
a lot of our critics implicitly assume is that we're saying you should always do velocity banking. You should always replace your mortgage with a first lien. Like it's always better in every situation. No, I'm definitely not saying that.
Yeah.
There are situations where I would advise people keep your mortgage. Don't do a first lien HELOC.
Yeah.
Don't do velocity. It's a strategy. It's a tool that has to be used where appropriate.
I'll give them a number. In fact, I probably tell 20 to 30% of people to move forward with a first lien HELOC. I'll give you the number. There you go.
So
Which
70
don't
to 80%
imply
of
that we
DeAndre's
just-
clients. Yeah, there you go. Very good. Okay. He's got a couple more. I hope you keep commenting, Mr. Moss, because I'd be interested to hear your thoughts. I'm skipping over some because I'm just sticking with Mr. Moss's. So Mr. Moss says, there is no such thing as amortized interest, only amortized loans, which are loans that are designed to be paid off in a designated length of time, compared to open-ended debt like credit cards and lines of credit. Interest on an amortized loan is calculated the same way that interest on open-ended debt. Amount owed times the interest rate over the calculation period, daily, monthly, etc. It is a simple interest calculation. I think that's correct. What he's saying is true. Is there anything you want to say there, DeAndre? It's a helpful corrective. I think it's true.
Yeah,
What he's saying.
the primary difference is when it's calculated. So
Right.
amortized
Right.
interest is calculated based on the previous month's end balance, not based on the current month. So other than that, yes, he's correct.
I agree with him. Some of the critics make amortized interest seem like it's this big, massive, scary thing where you've had this hidden tsunami of interest. No, not really. It's just about how it's scheduled. That doesn't mean it's unimportant, but it's not a big evil thing if you have an amortized loan. There could be a more efficient way to pay it, but that would depend on your specific situation. This is another one that's more technical, but I don't think we could disagree with him. He says, amortized loans do not use compound interest calculations. They are simple interest calculations. The only way to wind up with compound interest on any kind of debt, amortized or open-ended, is if the payment is not made or is less than the interest, and the interest is added to the principal balance amount that the next interest calculation is based on.
I don't know if I've ever heard anybody say it was compound.
I'm pretty sure he's putting words in my mouth. I think I remember what I said. I didn't say it is compound interest. I said it's kind of like that. I didn't say that exactly, but I can understand it. What he's saying is true.
Yeah. I just don't recall ever hearing amortized interest being said to be compound interest at any point. But
He's putting words in my mouth. What he says is true.